Eromosele Aziba from Afrinvest is live here in the studios this Friday morning to tee off this conversation. Is going to continue all through Monday, Tuesday, then post-meeting. Of course, you know, it's going to be all over. Thank you for coming.
Thank you for having me, boss.
Great. It's Friday. Consensus is maintaining status quo. So I've got a few questions for you. Why do you think, from an economic metrics point of view, how do we arrive, you folks who are analysts, at that the central bank will retain all the liquidity ratio, the headline NPR, and of course the other parameters?
Well, looking at the current conditions in the economy and looking at different scenarios, we also arrived at a decision that they would most likely maintain status quo. So if you try to make a case for increasing NPR, for instance, we've been talking about how the private sector has been crowded out from borrowing due to the higher rates that we're seeing in the market, and this could potentially worsen that situation. Then again, if you look at a case where they might ease monetary policy rates, this would mean there will be increased currency there'll be increased money supply in the market, and we know the CBN has been trying to curb, trying to sort of tighten liquidity levels out there in order to reduce the pressures on the FX markets that we've been seeing. So further easing rates could potentially lead to increased money supply, which would have a resultant effect on stability in the FX markets, which the CBN has continued to hamper on. So looking at all these factors, we believe that they would likely retain rates while also continuing their debate on how best to improve the situation in the FX market and further cement the current sort of stability that we're seeing there.
It looks a bit of a consensus that, yes, if you cut rate, it does not necessarily translate to more credit to the private sector. So Godwin Emefiele and the rest of his team are as well said, look, we might as well just focus on FX and see how that would improve production, domestic production, industrial production, help exports as dollars keep going into the various window. But again, from the fiscal side of things, in terms of the budgetary pronouncements and actions, yesterday the acting president was looking for a movement of some billions, close to about 200 billion, into the works, housing, area under the Fasholas ministry, the Honorable Minister. You think this is something that is something to watch?
Well, yes. I mean, looking at the 2017 budget, which is also an expansionary budget, we also have a record amount set aside for capital expenditure, which we expect to boost activities within the economy in terms of creating jobs, improving infrastructure, and likes. And we believe these funds that the acting president is requesting for is in line with that plan to ensure that the capital projects that have been laid out in the budget are actually achieved, which will be broadly positive for us in general.
What else is likely going to be new that we're going to hear from Godwin Emefiele? I'm sure he's going to talk about the stock market, which has been largely positive in Q2. So that's going to be, I'm sure it's going to allude to that. The stability in the FX market, the I&E window in particular. What else do you think is going to say? Do you think it's going to come back, as usual, to give the banks a knock on the head?
Well, no, it's highly unlikely that we would see anything different from what we've seen in the past 3 meetings that we've had in the year. But like you mentioned, we've seen a general improvement in the economic condition, especially in the second quarter of the year. Looking at manufacturing PMI data that has come out, we had expansions in 3 consecutive months in Q2. We've seen year-on-year inflation also sort of trend lower, although it's due to high base impact, and we also we also expect that from the Q2 2017 GDP numbers that will come out, the economy will be confirmed to be out of a recession. So yeah, he's going to state the general improvements in the economy, but like I mentioned earlier, it's sort of a situation where the CBN can't afford to ease or tighten, so they would most likely just stay, maintain status quo.
Maintain status quo. What will this status quo, what will it mean for us moving forward into the final 3 meetings of 2017 when we're done with by Tuesday?
Well, it broadly means that the current trend of intervention by the CBN, the continuous mop-ups, OMO mop-ups, the higher rates we're seeing at the T-bills auctions would probably be sustained. Like I mentioned, the major focus still remains on ensuring FX stability. And we believe until some moves are made towards that direction, the current conditions may just be maintained even to the coming meeting.
From a technical point of view, do you think the markets have already priced in these status quo expectations of MPC by Tuesday?
Well, like you mentioned, broadly, analyst consensus suggests that they'll be maintaining status quo. So it's safe to say that this expectation has already been priced in by investors.
Very interesting. So if there's nothing going to happen, we might just move on with our lives, as it were. Just hold the meeting. So this is just basically marking the books, as it were, and just move on from the central bank. Or do you think there could be a surprise at any point?
We don't expect to see any surprises from this meeting.
Really? The South African Central Bank made a surprise cut yesterday.
Yeah, but if you think about the conditions in South African economy, economic growth has significantly declined. The economy has been going through a whole lot of challenges. We had forecast of expectation of a contraction from the South African Central Bank earlier in the year, and so there's that belief that they need to spend their way out of recession. So that could be what would have informed the rate cuts that we saw there. On
paper, on front page news, you think Nigeria is doing technically better than South Africa at the moment in terms from an economic point of view?
Well, we're starting to see activities in our economy pick up, where a lot of activities in the manufacturing sector. When you compare this to South Africa, since the start of the year, they've been having a lot of political instability, which has also sort of affected investor sentiment.
Issues as well.
Exactly, which has affected
and
sentiment.
Independence of the central bank, and those rate cuts by the rating agencies.
And this has somewhat dampened investor sentiment towards the South African economy as a whole, and Nigerian economy showing that it's on its way back up. We've seen a lot of interest and attention come back into Nigeria.
Okay, in the water and out of the water. Either way, do have a great weekend.